please come and sit down. We'd love to take questions from the audience as well, so please use the Slido and put your questions up, and I will try and get to them. I've got a small list first, so if you get bored with the questions I'm asking as well, ask your own questions too. Before we get going, I think I'd just like the panel to introduce themselves and say a little bit about their business and their technology landscape today. But before we do that, Ua, it might be helpful just to position where Payrails came from, because you're a kind of spin out from a merchant, aren't you?
That is correct. So maybe a quick story of who we are and why we're doing what we're doing. So our founders, they were managing one of the biggest merchants in the world, their payment stack, and they were able to build within the company, a smaller fintech company of 300 people. And they looked at the market, and they were working with different orchestration platforms, and they basically helped few orchestration platforms become orchestration platforms because they needed a solution to manage payments globally. But they realized these legacy players, these tech stacks, they were not enough to solve really complex problems. The workflows I mentioned, it's not just about processing payments, right? It's solving business cases. And when they realized it, they needed to build everything in-house. And then they realized, okay, building this in-house meant having a 300 engineer team. So maybe not every enterprise wants to do this. That's why they spun out, and we have very successfully raised our funds. We have good investors on board, and we are working together with world-class enterprises to help solve their complex payment complexity. So this is where Payrails came and why we basically built what we built.
Excellent. I think it's always helpful to understand where businesses come from, because often it positions also where they're going too. So let's start from that end, and we'll start with Siri. So tell us about 𝘬𝘯𝘢𝘢𝘦 and also how you manage your own technology.
Yeah, thank you, Jeff, and thank you everyone coming here and listening. Hope we don't bore you now after lunch and that you don't fall asleep. So my name is Siri 𝘬𝘯𝘢𝘬𝘮, and I come from the company 𝘬𝘯𝘢𝘬𝘮. We are an ISV, so an independent software vendor, and we develop the software for mainly the small merchant, the SMEs out there. We are broad in the sense that the software is acceptable by hospitality, retail, and service, the service segment. But we also go rather deep, so that we do have a lot of the functionalities in-house, but also, of course, work with partners where needed, with loyalty programs and so on. And how we work with the payment side, as you said, Jeff, where do we also come from? I come from the payment space. I come from Bambora, that got acquired by the Ugur and Worldline. So we are a lot of payments people in-house. And with that said, we don't do payments in-house. We work with the right partners. So we do have a couple of payment partners that we work with today. And what's important in those relationships, and I think we'll touch upon that, that is, of course, who is owning the merchant relationship, and where in the ecosystem do we need to work closer together, and where can 𝘬𝘯𝘢𝘬𝘬 be fronting the customer and be the one actually helping the customer with, for example, onboarding, reporting, and so on. So that's short about 𝘬𝘯𝘬𝘬𝘬 and myself.
Maybe can you talk about which payment providers you work with?
Yeah, so we work with Swedbank, which is one of the biggest banks in the Nordics. They're also a shareholder. So they own part of the company, and then they actually went in pretty early in the company. They saw the need of having a software vendor close to them, since they work with SMBs themselves, and we work with 𝘬𝘬𝘬𝘬𝘬. And we, of course, have a couple of interesting dialogue going on, so hopefully within short we can go out externally and talk about some new partnerships.
Thanks, Siri. Robert.
Hi, I'm Robert. I'm the CEO of the Ugur Group. Ugur really helps small to medium merchants commercialize and digitize their business. We do this in a full modular setup, offering basically 7 products, and with that, the entire ecosystem that they would need to really serve their customer base. So from point of sale to cashier software, full BSP gateway, acquiring, white label, buy now, pay later. Essentially the full suite. We provide this to our merchants singly, right? Also just the one product, and we're open to that. But I always say that our most happy merchants are the ones that have everything. Because,
and how much of that do you run in-house, and how much do you work with
So these,
your partners to provide?
all these products we provide in-house, but of course there's little bits and pieces and components that we outsource, right? Of course we have partners that help us with transaction monitoring. We have partners that help us with device identification and these sort of things, right? So there are little bits and pieces that we partner with, and you know, this is payments. We're all frenemies. We all partner and compete. So I tend to give as an example that our biggest provider, biggest supplier, is also probably our biggest competitor in another field, and it's also our biggest reseller on the software front.
And who is that?
Well, make it a guessing game. But it's Worldline.
Okay. Brilliant. Fines.
Yeah, hi everyone. I'm Fines. I'm head of payments for Kingfisher, which is a big retail group operating in sort of DIY and homeware. We don't operate in Germany, so if you're local, you might not have come across us, but our brands are B&Q, Screwfix in the UK, and then Castorama, which is in France and Poland, and then Brico Dépôt, which is in France and Iberia as well. So yeah, I'm very much on the merchant side here, and I was saying earlier before we came on stage, I'm sort of almost, well not Kingfisher, it's sort of a little bit of an exception to, well not an exception to some of this, but we're very early on in our kind of payments journey. We do not have a lot of payments resource. Sort of I joined 18 months ago, came from WorldPay before that, to really start to drive sort of a common payment strategy across the whole group and our banners. We're at a point where, because payments hasn't had an enormous amount of input and focus historically, there's an awful lot of potential, but it also means there's an awful lot to kind of solve in the short to medium term to try and realize that potential in the long term. And one of that is we've got a really high degree of fragmentation. I think on paper, you may look at sort of our suppliers and our landscape and you may think it looks very modular and kind of plays into what's been talked about. But it's almost the opposite, that it's very fragmented, and actually it means our control and sort of ability to kind of deliver on a long-term strategy and reach sort of the potential, I think, of what you're talking about. We're simply not there yet. So we're actually at a point where we want to drive simplicity and commonality. And then the way I describe it is, once we get to that point and we've got the foundations in place and we've got greater control over what we want to do, then we can increase complexity in areas sort of quite tactically that we know it's going to drive sort of really meaningful value long term. So we're very, very early on. I think the 4 phases that you showed earlier would be sort of quite sort of on the left-hand side of that. But looking long term at how we can kind of realize that potential and sort of, I suppose, progress through those phases, as you put it.
And where are you today on the balance between in-house and getting suppliers to do all the work for you?
Very the latter, getting suppliers to do the work for us. I mean, that's, I think, being a really heavily sort of legacy merchant in that regard, that's not a huge surprise. At the moment, we've got a generally pretty low appetite to sort of do things ourselves, simply from a sort of a resource perspective. We're not there on that journey. It's not to say we're not going to in the long term, but like I said, it's very much get the foundations in place and get that sort of control and be in a really strong position to kind of kick on from there first.
Okay. And Ike, what are your clients telling you?
Mm-hmm. Okay, good afternoon, first of all, everybody, and thanks for joining the session. My name is 𝘬𝘬𝘮𝘯𝘢𝘦𝘹𝘪𝘵. I'm partner and managing director of Tele Consulting. We are a consultancy specialized in the payments. And one of our core missions is actually to support merchants in defining their strategy, implementing and executing it, meaning that we're trying to help to increase the efficiency, the resilience, and also the scalability of payment setups. So you would probably be a very typical client of ours. Yeah, I'm happy to see where the discussion is taking us today, because it was an interesting start to see what you were telling us in terms of modularity and the different situations that you find in each and every merchant actually reflects what also our consulting practice shows to us. So every merchant is different. There is no one-fits-all solution. You really need to go into the business of each and every merchant, understand where he comes from, where he is today, what his goals, what his priorities are in terms of what do I want to achieve also with my payment setup. So what is more important? Do I need to scale my business internationally? Do I want to be more efficient and save cost? Is resilience an issue? So in terms of, do I need a multi-provider strategy? How is my commercial lock-in today? Can I somehow solve these problems? So the range of topics is really big.
Terrific. So could we put the Slido up so the audience can ask questions? And I'll ask my next question, which, to the panel, 𝘤𝘠 believes that modularity is a necessity. Do you agree that modularity is a necessity? And if so, which modules? Who would like to go first?
I would actually counter that. I think it really depends on the merchant. If you're a mid-sized regional merchant with a number of stores, with an online presence, you might think that modularity will help you, but in many cases it doesn't. It just creates complexity, and it will drive you away from focusing on your core. So having a provider that can help you out of the box with a certain level of quality, of course, is actually beneficial to you, rather than having all this set up modular, trying to mix and match the data points that you receive, mix and match settlement files. That complexity is actually something that can only hinder you from growing your business. So it depends on the merchant.
Yeah, so my comment on that, so this will be a pretty political answer. So on one hand side, we talk a lot about one-stop shop internally. Now we do work primarily with SMBs. We have a couple of larger retailers. Our first customer was IKEA, but the main parts are the SMBs, and they want everything under the same roof. They want to have one support, they want to have one back office, so they don't want to have different places where the customers are. But on the other hand, we also talk about a lot of best of breed. So who do what best in the whole ecosystem? And I mean, as we touch upon, all of us, how do we work good as partners? How do we integrate in a good way? Where, for example, early on, we built our whole onboarding tool together with Swedbank. They didn't have the flow that they needed to have a very, very smooth onboarding for them. It took a couple of weeks, and we came in after software vendor and built it together with them, and then we have done that with a lot of the payments partner that we do have. So I think it depends on, if you're on the merchant side, then it is a one-stop shop often that they need from the supplier side, but underneath, we need to work together and work with the best of breed with each and every area.
Okay.
Yeah, I would fully agree, basically. We saw that there's a lot of benefit in modularity and working with different suppliers from also your presentation that you had shown to us. But you always need to think of the trade-off in terms of, okay, what additional complexity, what additional cost probably, and what additional single point of failure or multiple points of failure you add to your setup. So I think it's always worth a thorough analysis of the situation. What do you want to achieve? What are really your goals in terms of a strategy, in terms of business achievements that you want to have before taking a decision on changing your setup towards more complexity in the payments? There can be a lot of use of it, but also a lot of risk and potentially cost.
Okay, so if we accept that SMBs want to buy one-stop shop, which I think everybody agrees pretty much, are we agreeing that for enterprise merchants, modularity is a necessity?
Maybe I can add on to that, right? Because I think also Robert mentioned that like their platform is more unified, like more shoving more power when it's used to the full page. Actually, then you guys are offering some modular approach as well, right, towards your customers. And I agree. I think complexity in the SME industry, their business is complex enough. They have different troubles. They need to pay the bills. They need to get the taxes ready. But I think in the context of enterprise, the complexity is reality of the business. You cannot really run from it, right? You need to either embrace it and manage that complexity, or that complexity manages you, right? I think that's why it's very important to distinguish, as you said, like in the SME industry, there's a different mindset. There's a different requirement that is expected from the owners or the operational people. But on the enterprise level, I think that, as Fina said, like complexity is real. I mean, you cannot really run from complexity, right?
So I can see the Slido QR code down here on my screen, but I can't see it up on the main screen. I think you can probably go into the app and ask a question, if you like, if we can't get the Slido on the main screen. It'd be good to hear from the audience what you think. So but going back to my necessity question. So if modularity is a necessity for enterprise, which modules? Is there any case today for merchants not to have their own token vault, for example? Should every large merchant run its own token vault?
I'm not sure. I think from my perspective, I'd sort of also sort of taking a couple of steps back. I think modularity is a necessity as an industry, and I think the options have to be there. I'm not sure from my perspective, what I've seen, and like I think we'll probably keep repeating, every merchant is different. And I don't think we can't just lump all enterprise merchants into the same bucket and have the same expectations of enterprise merchants, because certainly from my experience, we're at a very, very different level to sort of other merchants who, sort of enterprise merchants you may see speak over the next few days. But I think having the option of modularity has to be there, but I think that there are not in 100% of cases, but you can largely, from what I'm seeing, operate an enterprise merchant almost quite similarly to sort of some SMBs, and I think you focus on having that foundation and core in place, and you have the modularity around that, as opposed to having every single element of what you're doing being completely modular, because it comes back to this trade-off of modularity equals complexity, and complexity comes with trade-off, and it doesn't always sort of increase value that much.
Maybe quickly add on to it, because I think it's a very nice example. For example, like we work with Puma, and for them, they want to focus on their core business. They want to produce nice shoes and sell them, right? For payments, there's like an added value service for them. That's why they are choosing to work with a platform like ours to enable and reduce that complexity internally towards them. But then you will have companies like Vinted, right? They are very tech savvy, and fintech is actually their core. So basically, as you said, I think it's enterprise. Also, there's different types of enterprise, right? How tech-savvy is this enterprise? How important payments is this to their core business? I think the importance of payments increases, and then modularity comes along with it. But it doesn't necessarily mean that complexity needs to be reflected on the merchant side. What I was trying to illustrate was that actually the industry is complex, but the real art is basically reduce that complexity towards the merchant's internal systems, right? How do you manage this? And this is the software that enables this layer. That was my perspective, actually.
I would also add to this that modularity in itself might be helpful, but just switching your system from a legacy system to a modular system would probably not solve your problems in the end, as you said, because it's also a question about the internal organization, the people, the staff, the knowledge, the maturity, whether you can actually manage a payment process. And that's something that we also typically see in organizations. So they start thinking about what to change from a technology perspective in the payment stack. Should I switch to a different PSP? Should I implement payment orchestration? Should I do whatever from a technology perspective? But they are not looking at their processes and at their organization. And that's very often something where we see the hurdles. There is no end-to-end responsibility, nobody looking at the whole value chain, starting from the onboarding, integration of a checkout, what happens in the logistics part, if there's a refund, accounts payables, you name it. So there's a very siloed organization. They don't talk to each other, and this is something that you don't solve by modularity or new technology. You need to also look at your organization.
So, sorry, on that, I think you touched on something really important, and sort of be careful, because I'm speaking on another panel later, and this is sort of quite a key thing, so I don't want to sort of spoil it for anyone who's going to be at that other one later.
Please.
I think there's a bit of a chicken and egg scenario, is what you say. If you introduce the modularity, you've got to have the resource and the expertise and the people to be able to manage it effectively, otherwise it's not going to drive the value. Mm-hmm. And I think a really key problem that I've certainly seen, sort of both in my days at 𝘬𝘯𝘢𝘕 and now coming on the merchant side, is it's what described as kind of the penetration of payments expertise across merchants. And actually, it's a very, very small number of merchants overall in the grand scheme of things who actually have the expertise and the resource to be able to manage a highly modular sort of ecosystem and estate. And I think it's that chicken and egg scenario that if the industry as a whole is becoming much more modular, and we've certainly seen sort of some of the big players sort of move towards that modularity and in their offering, it's, I think, the sort of the merchant addressable market in that respect might be quite small, because I don't think there's a lot of merchants out there who will actually be able to manage it effectively. And I think we need to encourage merchants to more effectively realize the value of payments and invest in the expertise and the resource to then be able to take advantage of this. And I think the broader sort of supplier side of the industry will benefit that much more, the more expertise is actually on the merchant level.
So let's move on to that, because that was my sort of third area to investigate, because if we're saying merchants will take more direct control, with the help of companies like Payrails with their software, take more direct control of elements of the payment process and payment adjacent processes, you need more expertise in the room, don't you? And so let me start with Siri, because you're a software company, but you've come into it from payments. So I know payments is a very important part of the bundle that you sell. So how are you bringing payment expertise into the software industry that you now find yourselves in?
Yep.
And how will you judge when's the right time to in-source parts of the payment process into your own organization?
Yeah. So really good question. Taking a step back where 𝘰𝘮𝘯 started, we actually were on the track of becoming a payment facilitator. So we started that track, we started with all the processes around that. At the same time, I hired a lot of innovative product people that loves UX and UI and want to build a really cool software. And then I looked at how we did at Bambora, where we bought a lot of companies and got the expertise for free, basically, since we carved out the acquirer from the big bank we did then and so on. But we realized throughout this becoming a potential payment facilitator, it was a hard time bringing the same people in the same room into the same company. And it will change our culture a lot, because we want to be innovative, working with the software side, UX and all of that. And yeah, on top of it, rather costly, of course. So we took, rather early on, we took the decision to not bring it in-house. And you asked me the question, if we were to bring something in-house, I think it's hard to just pick and choose. I would rather say how tight do we work with the partners we do work with, and what is important for us to streamline together towards the merchants, such as onboarding, for example. So I'll bring the culture to the table here. I think that's an important part.
And is there a strong cultural difference between a typical software company and a typical payment company?
I would say in the product department it is. On the product side, I see myself a rather big difference on how we did at Bambora and at 𝘰𝘮𝘯, because you need a totally different kind of people at Bambora with regulatory parts and the compliance and all of that. While at 𝘰𝘮𝘯, we have designers and those kind of profiles. So yes, that's different, I would say.
I think the point where it really changes is if you start thinking about insourcing payments, is when you start touching what is regulated. In terms of touching money flows, touching accounts, which is very often a topic if you're speaking about platform or marketplace business models, always a big question. Okay, can I somehow do this myself? But if you want to do it yourself, you need to get a respective payment service license, and this changes dramatically your organizational requirements. So it might be a reasonable step, especially if you run really large marketplace or platforms, as we see for some of the large retailers and merchants like Otto, like Zalando. They all have their own payment service provider exactly due to this reason, but it's a huge step.
At the end, I think, the question is, what is core? What do you want to spend your time and energy and invest on? What's the return on that invest? And what is the alternative cost?
Yep.
You know, so only larger merchants that deal with a certain element of complexity have the benefit from insourcing it. There's another element from the cost side, which is, of course, economies of scale. Yes. Going directly to payment methods, you have less buying power than doing it through a PSP, who can, of course, bundle the volume of all their merchants together. So all of these things also play.
So understood that you need a certain size and scale, which is, to some extent, that's the first question. This is for enterprise, isn't it? But Fine, so if I could ask you a difficult question. If you decided to transform Kingfisher's payment infrastructure and strategy, and you go full on for the Payrails vision of componentization, how many people have you got to hire?
Without Payrails or with Payrails? That's okay. With Payrails, minimalized.
Yeah, I mean, right now, like I said, we're at that end where we do not have a lot of resource and expertise in the business, and especially for a business of our scale. I mean, to embark on something like that, we'd need to sort of quite fundamentally look at, from just, a resourcing perspective, what that plan is going to be, because like exactly the point we were saying earlier, there's no point introducing that kind of complexity and everything unless you've got the people in the business to actually capitalize on it. So, I mean, it was interesting sort of what you were just saying. I was chatting to someone literally just before this, and he was saying in respect to marketplaces and things and taking on regulatory sort of obligations and licenses, sort of get your North Star is what he said, and that can be quite a long way in the future, and just have a really clear path to how you get there. Because sure, you've got some really big marketplaces and businesses today who have got their own payments businesses. You look at sort of MarketPay, which was spun off from Carrefour. I mean, Amazon Pay has, I think, 5,000 people or something like that. And sort of, it often can feel like, I think, being certainly a business like ours, we're really behind the curve when you sort of make those comparisons. But it's just have a really clear plan long-term in sort of how you get there. I mean, for us at the moment, we're not exploring sort of something like that for the time being. Like I said, it's drive simplicity and get that foundation in place, and that's where we'll probably start exploring a bit more long-term.
But actually, it's a very interesting topic, as you mentioned, right? So because I think that's what we see in the industry. I think extending the team, that's the right approach, right? So basically, I think it's not anymore supplier-buyer relationship. It's a really partnership approach, right? When you say, okay, what does it require to build something like this? I mean, our founders did it. It's 300 people, and they're in Delivery Hero fintech team right now. But the thing is, like, how do you basically abstract this complexity for the merchant, so the merchant can still benefit from this complexity and managing this complexity in a flexible way, versus building it in-house, right? So I think that's what, to your point, Finance, I think it's very important to understand that this era of payments is about partnerships and extending your payments setup, right? How can you enable merchants or take this hurdle from the merchants while you abstract the complexity of dealing with these different bits and pieces, and basically abstract the complexity towards the merchants so that they can concentrate on the business? I think this is the most essence part, right? So how can you fit in where the merchant lacks without overhauling the whole system?
I mean, I completely agree, like the whole partnership aspect of it and sort of moving away from that, you're just buying a product kind of sense. Because, I mean, payments for a lot of merchants and used to be the whole just make sure it works and make sure it's cheap, and that's very much what that transactional relationship used to be. And like you say, I think the relationship element of it is really key. But then coming to the sort of the modularity, I mean, at the end of the day, from sort of the resource point, you've got to manage those partnerships yourself internally anyway, and you need the resource to be able to do that. The more modular you are, the more relationships you have to manage, and it's quite a web to sort of have to navigate.
Well, can I just drill down a bit on what you mean by partnership and how that differs from a supply relationship? Because clearly you're still paying money for a service, but what's a partnership in this respect?
I mean, maybe I'm going to oversimplify it, but certainly from my perspective, I want to be having sort of the regular touch points with our key providers. I want to be having meaningful conversations beyond just, what does our performance look like? I want more than just a QBR where they come with our auth rates and say, hey, this is what it looks like, and things like that. I want to actually have discussions, not just with sort of the relationship management side of things. I want to be speaking to the product teams in the background, maybe the risk teams in the background. And it's not just about sort of building new ideas. It's about learning and exchanging ideas. We can, as much as we can learn from them, we can feed back into our suppliers and try and sort of help them learn a bit about the experience on the merchant side and what are the challenges that we see as well.
So I've still got no questions here, which means the audience must be really enjoying the questions I'm asking. So I shall ask. I've got one more, and then I'm struggling, guys. Okay, so I'm only going to need some help.
I can add actually, as to partnerships, can I add something to that? We talk a lot about to share the same product vision, so that we all know where we're heading from a product perspective, so that we come from the 𝘰𝘮 perspective with the software and come with our strategy and what's important for us, and at the same time our payment partners in this sense, and also other kind of partners, do we want to go to the same end goal? I think that we talk a lot about both during the partnerships and also when we choose new partners, that needs to be established from the beginning. I think that's super important.
So reverting back to the modularity, which is I guess the main topic of discussion, we've talked about people. So on the merchant side, or I guess the software provider side, you have to hire a team of people, presumably from the payment industry, to manage your end of this relationship. What about compliance? Because a lot of those boxes that you showed I think require some level of compliance with regulations. And my experience working in an ISV for retailers was retailers didn't really bother about compliance, and they focus on speed and agility, and 80% is probably good enough, and just make it work, rather than financial services where it's got to be 99.9 and it's got to work. So where does compliance fit in all this?
Maybe I can start off. I think I worked on previously to Payrails, I was working in a payment service provider, and I see compliance can be used as a threat. I think if you don't want to do something, if you don't want to change something, it's easy to say, hey, this is not compliant. I think it's really important to understand where the compliance boundaries lie. For example, we mentioned marketplaces. It's very important to understand that where the complexity of the compliance comes from. What does the regulation really say? Does it say, okay, use this product or this product? No. Regulation clearly states that, for example, you should not be in the money flow. And there are multiple ways to be not in the money flow. Again, there the consultative approach and basically understanding the business needs comes very clearly. And as you mentioned, these components, they are all regulated, or, for example, KYC, payout. These are all very important topics within the scope of compliance. But how do you bring these compliant parties together seamlessly? That is the job of the software. And actually what you mentioned was very interesting, because you mentioned the difference between a software company and a payment company's UX, for example. How do you make it easier for the companies to access these old legacy regulated players? How can you connect it in a seamless way with software, which is easier to use for providers, so that the compliance is not a burden anymore, but it's a requirement that they take off? I think that's an interesting way to look at it from that angle.
But compliant companies don't need to be old.
That is not
They also bring new tech.
Right, I think, Cinar, you said that you deliberately chose not to go in deeper into the payment stack because of compliance.
Part of it, yes. Yeah. Due to the complexity and that would require different competence that we don't have today, and that we do have partners that we actually can work with today that bring that to the table for us. We don't need to take it in-house.
I think also here it's when you're talking about compliance, is it a question whether you are yourself required to be compliant with payment regulation, for example, which puts other responsibilities, other roles, other requirements, other processes on your own organization, which you need to fulfill, because this is something which you cannot outsource. This is a bad thing about compliance. You need to be compliant. You cannot say somebody else, be compliant for me, where it hits you. Versus there are certain things that need to be done as part of the process, like the onboarding that we heard, like sanction screening is a big topic, also creditworthiness checks, all this kind of stuff, which can, of course, be in a modular setup outsourced to somebody who provides this as a service to you.
Yes, because merchants don't want to be bothered with sanctions.
Well, it depends on the type of business that you're doing.
Yeah.
Especially in the B2B space, sanction management, economic sanction management specifically is a big topic.
So you need to make sure none of your customers are on the list.
Right, exactly.
I think the compliance side of things, sort of was coming back to your question before as well, is a really, really good example of what a good partnership can be. Like if I've got a provider who is really proactively bringing, whether it's compliance, upcoming regulatory stuff, scheme changes to us before we've found it. Like ideally, I don't find out about a scheme change sort of when it's already too late. Our partner's already brought it to us saying, look, this is what's coming, either this is what you need to do, or don't worry, it's all good. And I think that's a really, really good example of a strong partnership between merchant and provider and how it can be successful. And I think like marketplaces for one especially is from a regulatory side of things, it's a maze. And so having providers who are going to really help you navigate that, not just now, but when we've got marketplaces, and the term I keep using internally is we want to build something from a payments perspective that is future-proofed. Because we've got changes on the near horizon, and I expect there will be another horizon beyond that with more changes that impact our marketplace. And we don't want to have to be constantly making really sort of significant change. We want a future-proofed sort of solution that's going to help us grow.
So we've got a couple of questions on the Slido. One of them is quite technical, so I'll start with that one because I'm sure 𝘰𝘀 probably knows the answer to this one. How do tokens and bin databases work? Does a token preserve the bin number, allowing it to get info about the card type and issuer?
Yes.
Yes.
So basically, like I think how tokens work is like token is the basically encrypted card information, which merchants should not see due to compliance reasons, and providers like ourselves can basically abstract this complexity. And within this information, there are certain hidden gems. For example, what type of card, which bank, and with this you can build different workflows, right? So this can enable you to understand your customer even better. Is this a corporate credit card? Is it a virtual card? Where does this customer is coming from? So basically, within the small 16-digit number, you have a lot of information that you can use for your internal systems.
And is there anybody else on the panel using this extra information? Okay.
You should be.
So, next question. This is more of a general one, and I think this is one I might go quickly around the panel and just ask for a one-word answer. So, where is it better for an enterprise merchant to invest? Tech resources, partner management, or in-house payment expertise?
I mean, I think
Choose
Yeah, well,
one. Choose one.
the bad answer for consultant is payment expertise, of course, because it means you need to build up your own knowledge and not pay consultants forever.
Fine.
I'm a very big advocate for payments expertise, and that comes back to a lot of what we've said about get the expertise internally that sort of can help you manage modularity, complexity, strategy, and performance.
Robert?
I think the boring answer is it depends, but I would say find a partner manager with payment expertise because he needs to know how to manage his partners.
Zuri?
Yeah, I would say a partner manager, and I'm looking at the relationship we have with IKEA and soon another one that we're going to launch, where the partnership is very important in how we
And do you agree with Robert that your partner managers need to be payment people?
It depends what the partners are that they're managing, naturally.
I think
But I assumed from the question that it was somebody managing the payment partners, but maybe I was incorrect.
I was having a conversation with a merchant yesterday, and I think all payment experts are also firefighters because payment is a mission critical and it breaks all the time. So basically, by nature, if you're a payment expert, you're expert in managing rough situations, especially on the merchant side. You need to manage your business continuity, right? So I think payment expertise really brings in this handling stressful moments and solving these stressful solutions. I think it goes hand in hand with partner management skills as well, yes.
Thank you. And we're just about out of time, so I'd like to thank our panel.